You're sitting in a waiting room. Fluorescent lights, plastic chairs, a clipboard in your lap with 47 questions you don't fully understand. You fill in what you can. You sign at the bottom. You slide it back across the counter. The woman on the other side looks at your form. Her expression doesn't change, but something shifts. Because in the 30 seconds it took her to scan that page, the insurance company already decided what you're worth to them. Not as a person, as a risk profile. And that number, your income, your zip code, your job title, determines everything. What you're offered, what you're charged, whether anyone picks up the phone when something goes wrong. This is how insurance companies treat you at every level of income, from $0 to $10 million. My name's Aris, and what I'm about to show you is a system most people interact with their entire lives without ever understanding how it actually works. Level 1. $0 to $15,000 a year. At this level, you don't choose insurance, you survive it. If you qualify for Medicaid, you're in the system, technically covered. But coverage and care are two different things. You call to book an appointment. The first available slot is 6 weeks out. You take it because you don't have another option. The clinic is 40 minutes by bus. You take 2 buses. You wait an hour past your appointment time. The doctor sees you for 8 minutes. You leave with a prescription you're not sure you can fill because the copay is $12 and you have $11 in your account until Friday. Your dental coverage doesn't exist. Your vision coverage doesn't exist. The tooth that's been hurting for 3 months keeps hurting. You don't have renter's insurance, not because you don't want it, because $22 a month is a number you've already spent somewhere else. If something gets stolen, if there's a fire, if your laptop disappears, you absorb it, alone. At this level, insurance is a concept that exists slightly outside your actual life. You know you need it. The math of needing it doesn't work. The insurance company knows you're here. They're not trying to reach you. There's not enough margin in your premium to justify the cost of finding you. You are not a customer at this level. You are a liability they'd prefer the government to handle. Level 2. $15,000 to $35,000 a year. You have a job now, maybe 2, and if you're lucky, one of them offers health insurance. You take it without reading the details because having it feels like the win. Then something happens. A minor surgery. An ER visit at 2 a.m. Nothing dramatic. Appendix maybe. A bad fall. You're in the hospital for 1 night. You feel okay about it because you have insurance. 3 weeks later, the bill arrives. $4,200. After insurance. You stare at it the way you stare at things that don't make sense. The deductible was $1,500. The coinsurance kicked in after that. The anesthesiologist was out of network, even though the hospital wasn't. Nobody told you that was possible. Nobody told you to ask. You call the insurance company. You are on hold for 34 minutes. The representative reads from a script. She uses the word unfortunately 4 times. You set up a payment plan. $85 a month for 4 years. Your car insurance is the minimum required by law because full coverage costs more than the car is worth. If someone hits you and drives away, you pay for it yourself. Your renter's insurance is $16 a month. The deductible is $1,000. You've never filed a claim because the things you've lost were never worth $1,000. At this level, insurance exists to protect you from the absolute worst case. Everything below catastrophic, you absorb. The insurance company sees you as a volume customer. Small premium, moderate risk. They want you paying in and never filing. So far, you're cooperating perfectly. Level 3. $35,000 to $75,000 a year. This is where most people live, and this is where the insurance industry makes most of its money. You have employer-sponsored health insurance. You pay your portion of the premium every month without thinking about it too much. It comes out before you see the number. Your deductible is $1,400. Your out-of-pocket maximum is $6,000.
You don't know what your formulary is. You don't know what prior authorization means until the day your doctor prescribes something and the insurance company says no. You have a 401k with a life insurance rider. You have a term life policy you bought after your first kid. You Googled the coverage amount and picked something that sounded right. Your auto insurance is real now. Collision, comprehensive, the full thing. You added an umbrella policy because a coworker mentioned it once. You're not entirely sure what it covers. Here's what the insurance company sees at this level: a reliable premium payer who doesn't fully understand their policy and is statistically unlikely to fight back when a claim is underpaid. You're not ignored at this level. You're processed. When you call, someone answers. When you file a claim, it moves through a system. But that system is optimized not for your outcome, for their margin. The average claim denial rate for major U.S. insurers hovers between 15 and 20%. Most people at this level accept the denial. They don't appeal. They absorb the difference. The insurance company is counting on that. It is a line item in their financial model.
Level 4, $75,000 to $200,000 a year. Something shifts here. You start understanding that insurance is not a product you buy. It's a negotiation you enter. You hire a broker, not the one your company assigned you, an independent one. He spends 90 minutes walking you through options you didn't know existed. Your health insurance deductible drops. Your network expands. You add a health savings account and start treating it like a stealth investment vehicle, because that's exactly what it is. Your life insurance gets reviewed by someone who actually runs the numbers for your specific situation, not a generic calculator. Your income, your debts, your dependents, your projected future earnings. You have disability insurance now, real disability insurance, the kind that replaces 60 to 70% of your income if you can't work. Most people at lower levels have never heard anyone recommend this. At this level, every financial advisor mentions it first. Your auto policy has a $2 million umbrella over it. If someone slips on their driveway and sues you, the umbrella absorbs it. Here's what changed. At this income level, you have enough assets that protecting them is worth the insurance company's attention. They start competing for you, not aggressively, steadily. Better rates on renewal, proactive calls before your policy lapses, a dedicated agent who knows your name. You're not a risk category anymore. You're a relationship worth keeping. Level 5, $200,000 to $500,000 a year. You stop buying insurance off a menu. At this level, a specialist reviews your entire financial picture before recommending a single policy. The conversation isn't about premiums, it's about exposure. What are you exposed to? Litigation, property loss, business liability, key person risk. The insurance is designed around the gaps, not around what's standard. Your health coverage is premium. Concierge medicine enters the picture. A monthly fee buys you same-day appointments, a physician's cell number, and care that doesn't feel like a transaction. Your life policy is now a tool. Whole life or indexed universal life, used not just for death benefit, but as a tax-advantaged vehicle your financial advisor and insurance broker designed together. When you file a claim at this level, someone calls you. Not a representative, a dedicated case manager. The claim doesn't sit in a queue, it gets attention. You are profitable enough to retain. Losing your business would show up in someone's quarterly report, so the service matches the stakes. Level 6, $500,000 to $2 million a year. The word insurance stops being used in your meetings. The word is now risk management. A team, your attorney, your CPA, your financial advisor, and a specialized risk consultant sit in a room and map every vector of exposure in your life. Business interruption, directors and officers liability, cyber liability if you own a business, fine art and collectibles riders on your homeowner's policy, aviation coverage if you fly private. The premiums you pay annually would be a salary at level 1,
but the coverage is so precisely tailored that you are statistically unlikely to pay a dollar that isn't returned tenfold in protection. When something goes wrong at this level, and eventually something always does, a claims advocate is assigned to your case. Their only job is to maximize your outcome. You don't call a 1-800 number, you call a person. That person calls you back within the hour.
Level 7, $2 million to $10 million. At this level, insurance companies don't wait for you to come to them. They come to you. Lloyd's of London syndicates, private placement life insurance, captive insurance companies, where you essentially become your own insurer and keep the underwriting profit for yourself. This is where the architecture of the system becomes fully visible, because a captive insurance company means you set the premiums, you control the reserves, and if claims are low, which they're designed to be, the profit stays inside your structure. The wealthy don't just buy insurance. At this level, they profit from the same mechanism that extracted money from every level below them. The Lloyd's broker who flies to meet you is not selling you a product. He's offering you access to a market that has insured the Hope Diamond, the legs of a Brazilian soccer player, and satellites in orbit. Your risk is custom priced by underwriters who specialize in people whose exposures don't fit a standard form. Somewhere right now, someone is sitting in a plastic chair under fluorescent lights, clipboard in their lap, 47 questions they don't fully understand. They fill in what they can. They sign at the bottom. They slide it back. They don't know yet that the system they just entered was not designed equally, that a claim denial at their level is a statistical certainty built into a margin model, that the same company offering them a 6-week wait and a $4,000 bill will send a private case manager to someone else within the hour. The insurance company didn't build this system to be cruel. It built it to be profitable. And profitable means the people who need protection the most get the least of it, while the people who need it least get a team, a strategy, and a seat at the table. The system isn't broken. It's working exactly the way it was designed. The only question is which side of it you're on right now and what you're going to do about that. My name is Aris. If this showed you something you won't be able to unsee, you know what to do.